All right, guys. So we've got a controversial topic to discuss on this particular channel, and I want to thank you guys for tuning in. Please hit that thumbs up as we continue to grow the channel. Let's get straight into this. So, the question is social media ruining stock investing? And now I understand there's going to be those that are going to be on this side, some are going to be on that side, some may be right here in the middle. But ultimately, I think this comes down to, your perspective and what you think, which I want you guys to tell me what you think in the comments below. But I think the biggest issue that we have is education, right? Not taking the initiative to learn, right? You want to just hop into this thing like it's a casino. And ultimately, even if you're short term, hey, whatever works for you, whatever way that you succeed as it pertains to investing is on you. I don't judge you either way it goes because you can make money obviously long term, which is probably not probably, but is the best way to make money. It is less risky, but it requires a lot more patience. And so for myself, 39 and a half years old, I would be considered a millennial. So I understand that in my generation and the generations that follow, and maybe even some, maybe Generation X, the patience is not there compared to yesteryear, right? So this is why you got people talking about swing trading, and I talk about it from time to time. But mostly, I tell you that I'm long term. Then you've got day trading, and I've shown you guys receipts of me trying that. It was successful, and I concluded that for me, if I say, you know what, I want to make a couple $100 over, a 4 to 6 week period because we want to have a big steak dinner, for my family of six. Yeah, I'll do that. But with the conditions of the market now, I'm not really enthused about day trading. And I understand everybody has their own, rhythm and their own strategy. But for me, with the uncertainty of the market, I'm just choosing not to do it at this present point, and that could change at a later date. But there's ultimately a bunch of different things that we're going to discuss to go along with that. Now, the first thing we're going to talk about is the herd mentality, right? Or, a lot of you may know a term called FOMO, fear of missing out. And so, with this, obviously, social media is going to amplify these trends and create herd behavior. And now, when a stock or a trading idea goes viral, it can push investors to jump into trades they don't fully understand, often out of fear of missing out on quick profits. There's that key: quick profits, right? And this can drive up prices to unsustainable levels, leading to bubbles, which you guys know bubbles burst, right? And sudden crashes. So if you've been a person that's had moments of short-term trading, you probably have experienced this. Maybe you got into your emotions and you decided, hey, well, everybody else is doing it, I don't want to miss out on this ride. So you buy something like I would say a speculative cryptocurrency. You get in, and then 5 to 10 minutes later, guess what? This thing goes down in value substantially. You lost, $1,000 out of the 2,000 that you put in. Now you're upset, and so you didn't use a stop loss. You didn't understand what you were putting your money into, and now you're mad at the result because you ultimately hopped into this like it was a casino because you don't know what this is. You don't know what this crypto does or what the stock is all about. You just hopped in because somebody told you about it. and you feared that you were going to miss out on the opportunity to make some money. Okay. Now, number two, it could be arguable, right? And this is promoting short-termism. And now, like I said, once you get to the point where you understand markets, you understand what you're doing, I'm not going to necessarily say that it's a bad thing, especially if you're a person that's experienced and you're successful, right? There's nothing wrong with it. If you got success, why not keep doing it, right? But if you are newer, and I would say when I say newer, you've been, in the investing slash trading, um, I would say 5 years and less. And then listen, there's people that have been doing this less than 5 years that have this thing figured out. They got a system going and they make money. But when we look at the very small percentage of people that are profitable when it comes to short-termism, that can be problematic to a lot of your wealth, right? And when you go long term, obviously you're going to get the best bang for your buck, especially um, when you're able to buy low, dollar cost average, and then sell high. Okay, but to get more specific with this promoting short-termism, this would more so be geared towards influencers, right? Now, many social media platforms focus on short-term sensationalized gains, which can distort the traditional long-term view of investing. Now, this leads to day trading and speculation rather than disciplined, patient strategies that typically drive long-term wealth accumulation. Now, the reason that this happens is, people want a quick fix to their situation. If their funds are running dry, if they got an issue like their car needs to go to the shop, or they're behind on bills, they may look to something like the stock market as a quick way to make a quick buck. But ultimately, when you go into these things with no strategy, you're going to have a problem. All right. Now let's talk about number three: misinformation and lack of due diligence. So I know there's a lot of, I would say, influencers that don't like when people say, do your own due diligence. I'm not giving financial advice. When they hear terms like that, they don't really like it, and for whatever reason. But when we think about misinformation, ultimately, at the end of the day, if someone tells you something, you should still do your own research and figure things out on your own, not just say, oh, well, hey, they told me to put my money into this, so I'm going to do it. I'm not going to question anything. I'm not going to do any research. I mean, guys, come on, you can't do that, right? So let's be smart about what we're doing, how we're moving, and we got to be accountable for the things that we do, right? So once you've done your due diligence and you decide, hey, this is something that I want to do, then it all falls on you. But to expand on this misinformation and lack of due diligence, social media platforms can spread inaccurate or misleading information. Now, the stock picks and advice from influencers or anonymous accounts are often not based on proper analysis. Now, investors relying on this can make poor decisions without conducting their own research, right? So ultimately, this is what happens. Okay, so you're making a poor decision. You didn't do your due diligence. You didn't understand what you were investing your money into, and now you're sitting there holding the bag because you didn't understand what was going on. Now let's talk about number four, the pump and dump schemes. Now, social media has made it easier for traders to manipulate stock prices by hyping up certain stocks, especially penny stocks, artificially inflating their price, and then selling their own holdings for profit. Now, this leaves unsuspected retail investors stuck with losses. This happens a lot. And so I've seen it to where people have been put a lot of money into penny stocks, and in order to get themselves out of that situation, they got a nice following and they entice people to, get the penny stock so they can get out of it, and a lot of times make a profit off of them while the other person is caught holding the bag, because guess what? That stock really isn't worth anything and it's never going to go anywhere. Okay. Now, number five, overemphasize on meme stocks. Now, from time to time, we do talk about meme stocks on this channel, mostly GameStop or AMC, really to let you guys know what's going on. Now, I made a trade earlier this year on AMC, and I told you guys I wasn't trading no more. So you don't want yourself to get caught up in a situation where you think every time you put money into a meme stock that it's going to turn out in your favor, because it potentially won't. All right. Now, typically, meme stocks are stocks that really don't have a future, and they only move based on, you know, the crowds, the herds pumping the stock up. Now, I will say this. Now, if the earnings turn out better than expected, that's a whole nother ball game. But to emphasize on this more, now the rise of meme stocks has fueled speculative mania. While these stocks can sometimes deliver massive returns, they are also extremely volatile and often detached from their fundamentals. Now, many investors get caught up in the hype only to experience large losses when the stock crashes. Okay. Now, number six, I think a lot of people have been here. Pressure to take higher risk. Now, the first thought that comes to my mind is waiting to really be greedy, waiting to take a higher profit, and so that in itself is risky when you're trading. And I know in this platform, I've told you guys, as far as Neo, I'll start thinking about taking profits once it gets around $10. I understand. Now, listen, I do think they are going to surpass $10 and go even higher, but I do understand there is a chance that it may not. I'm not that delusional, but the pressure to take higher risks, social media often glorifies traders who take on significant risk and see outsized gains. This creates unrealistic expectations, encourages novice investors to use leverage options or other risky strategies that might not be suitable for the experience level or financial situation. Now, ultimately, the best thing to do is to buy and hold. And you guys have to think, a lot of these brokerages are pushing you to trade because the more you trade, the more money they make, right? So if I'm telling you as a broker, hey, free trading for your first 1,000 trades, I'm probably not going to tell you when those free trades are up. And, you got to be careful because a lot of these brokerages are slick how they take their cut. So they may not even show you once they're starting to take their fee from these trades. So be very careful and skeptical of that. And remember, the less trades that you make, the more money you keep. Now, let's just move on to number eight. Okay. Now, num we'll go back to number seven later, but number eight, emotional decision making. Now, the constant stream of information, news, and opinions on social media can lead to emotional investing. This makes it difficult for people to stick to their investment plan and can lead to panic selling or impulsive buying during market volatility. Okay. So you got to get a hold of your emotions. It's fine to look at what other people have to say. People are going to get their perspectives, but ultimately, at the end of the day, you are responsible for the decisions that you make. And before you make a decision, I would say really sit and think about it before you do it. If you feel yourself, anxious, or you're getting anxiety and all of these different feels, then you probably shouldn't be doing it, right? And never trade more than you're willing to lose. Use your stop losses, guys. You guys have tools not to lose all your money. Don't let your ego overtake your soul, okay? Now, the last thing we're going to talk about is the erosion of fundamental analysis. So, the prevalence of hype driven stock picks on platforms, I'm not going to mention them, has diminished the focus on fundamental analysis, such as evaluating the company's financials, industry outlook, and management quality, which has historically been crucial for sound investment decisions. Now, on this particular channel, we kind of talk about all of those. Mostly, you know, I would say charting, looking at, different ranges, because I know a lot of you guys like that, and that's why I do it. And then we also go into fundamentals like financials and other things. But I think, on this channel, we're going to start to go a little bit further with the fundamental analysis. And I know it's not necessarily always fun to do when earnings is not really around the corner, but we'll make a way for us to get there. Now, ultimately, guys, information on social media can be valuable, especially when it comes to new ideas and market trends to kind of keep you abreast of what's going on. But at the end of the day, if you find that someone is influencing you more than just influencing you, period, you guys have to take a breath, think about what's going on, do your research, and then you start to put your brain power into making your own decisions, okay? So that's what I wanted to talk about today. Yes, social media has changed the game for stock investing. A lot of you will say that it's ruining stock investing, but ultimately, at the end of the day, people are going to make their own decisions. Okay. So I appreciate you guys. Please hit that thumbs up, and we're out, guys.